shares of Tesla right now, it is down nearly 5%. Profits from Tesla's Bitcoin investments, though, on track to outpace profits from its electric vehicles. The company's already made roughly $1 billion on paper. That's at least according to our next guest. Wedbush Securities, Dan Ives, managing director there. Dan, let's start with the case there, because the $1 billion in terms of profits on paper, certainly a significant return when you consider the investment was only announced a few weeks ago. And yet you look at the volatility of where Bitcoin is trading today, and that seems to point to sort of the risk that it's inherently introduced now because of the significant investment it's made in cryptocurrency. How are you seeing the payoff here between the risk and the volatility and also the profits that come with it?
Yeah, it's a great question. I mean, look, $1.5 billion that they've invested so far, about $1 billion in profit. And like I've said, that's more than all they made on EV vehicles in 2020. But that continues to be the double-edged sword. It's going to add risk to the story. And we're seeing that in terms of the volatility. But ultimately, it's forest through trees. In terms of where Tesla and Musk see Bitcoin, it's going to be a part of the Tesla story, not just from an investment perspective, but from a transaction point of view as well. And this, just in my view, just is going to continue to be a big part of the story going forward, especially as we go into this golden age of EVs.
Yeah, I mean, my question would be how frustrating that is maybe for an analyst who's believed for a while and has been right on kind of the upside here in Tesla. I mean, I imagine it's got to be a headache for you to now factor in these swings that are stemming from Bitcoin, and maybe how it could be, as critics point out, maybe a bit of a distraction in the Tesla story moving forward.
Yeah, I mean, but at this point, it's still contained. $1.5 billion. I think that's something most investors that I've talked to still view the goalpost there as pretty contained relative to the overall assets. And it's a sideshow, because ultimately the overall story here is the transformational EV story. $5 trillion over the next decade. And right now, it's Tesla's world and everyone else is paying rent in terms of EVs. But you see Ford, GM, others that are really going all in on EVs. And I think there's going to be a big enough ocean for more than one boat. I think we're just in the early innings of this EV story playing out. And that's why Tesla, I still think this is $1 trillion market cap over the coming months.
In terms of how you value Tesla, though, has that shifted at all? Is it really, if you look at the $743 roughly it's trading at right now, is it ultimately on the EVs, on the batteries? How do you factor in the Bitcoin investment in the overall price?
Yeah, so far, I still view Bitcoin as not being factored into the price. If that starts to be 3 to 4 billion that they invest or more, then that starts to be something more significant that you could factor in to the sum of the parts. But right now, we think China alone is worth $100 per share. And you look at what's happened there, I think Tesla is going to be on track to hit toward 800,000 units for the year. And that's really the story here. And I think Bitcoin will start to play more of a role as it becomes more of a bigger percentage transactions or from an investment perspective. But we still believe, although a ripple effect, less than 5% of public companies will be investing in Bitcoin over the next 12 to 18 months, till at least there's more regulatory goalposts put in.
Yeah, I mean, is it going to take them upping their investment for it to need to be priced into where it goes? Because even just the size of it, as you rightly point out, was up pretty significantly. If you put in $1.5 billion, it's about 10%, right, or under 10% of their cash or cash equivalents into Bitcoin. I mean, if we continue to see a rally there, it's going to be a larger and larger piece of this company.
Yeah, and I think that becomes a slippery slope, because going back to your other point, you don't want this sideshow to ruin the overall EV party. I mean, in terms of even where it trades today, you'll see stock down with Bitcoin down. But I think that's something, if it starts to get to 20% of cash, 25%, then I think it starts to become more front and center. But for now, it's really a greenfield opportunity, especially with a Biden green tidal wave on the horizon and where Tesla's positioned. I think that's where you're going to see these EV stocks that have taken a bit of a pause, and even what some of the Chinese players, NIO and others. But I think over the coming year, these stocks are going to be up significant.
Dan, let's shift our attention to Apple. Shares are down about 2.5% in the session right now, but you have said that you believe Apple can hit that $3 trillion market cap by the end of the year. Walk me through your thesis there. How much of this is about the growth and the momentum we've seen in the new iPhone sales? How much of it is about the services sector?
Yeah, and a big part is the super cycle. It's not just hype in terms of iPhone 12. It's playing out. And we've seen that from our checks across Asia. And I think more and more just getting bullish into March and June. And right now, Cupertino's on track to be potentially 240 million, 250 million iPhone units for the year. That will just massively beat the record from 2015. So I think this is an unprecedented super cycle that plays out. And then it's just a further monetization on the services. Services is key to the re-rating. We think services alone is worth 1.2 to 1.3 trillion. That's why I believe as we go into later this year, we have a $3 trillion market cap with Apple. And I view this sort of pause that we're seeing in the stock post what we saw in terms of numbers last month. It's just I view it as a knee jerk, not going to be sustained. But I still see a green light to own Apple here.
Dan, if there is one weak point that we've heard some of the critics, Apple critics, highlight is maybe weakness on the Apple TV side relative to what we've seen and obviously Apple has a lot going on, but the plus that Disney Plus has gotten from investors as they've leaned into streaming, obviously Netflix. So what's your take on maybe what more can be done to really boost Apple TV now, or is it just completely in this grand scope of things, it's just not important for Apple?
Well, yeah, and it goes back to on streaming. The biggest strategic mistake, in my opinion, from Jobs and Cook over the last 10 to 12 years was not acquiring Netflix a number of years ago. And now you look on streaming, well behind, look what's happening in the arms race with Disney. The only way that Apple becomes a legit player is if they buy a studio. We've talked about an MGM, Lionsgate, an A24. Otherwise, they're going to continue to sort of be on the outside looking in. And that's why, I think this is something they're going to be more and more forced into doing M&A because it's all about content. And right now, they've had great content, but they have a mansion with little furniture in it. And that's the problem when it comes to this arms race we're seeing, especially with Disney and, of course, Netflix top of the heap.
Yeah, not a lot of wrongs to right there, but maybe that one, as you rightly point out, one that they've been slow to kind of jump on. But Dan Ives, Wedbush Securities Managing Director, always love having you on. Thanks again for joining us.